the IT space, because that's been in focus. It had been underperforming earlier. Yesterday was good on account of recovery that we saw on the Nasdaq, but this morning opened weaker, largely because of the bellwether Accenture's commentary, which remained weak. But do Indian stocks actually get impacted by it or not? What does the recovery say? We have Reema joining in to give us all the details. Reema.
Thanks so much for that. But first, let's start with why Accenture ended down 7% despite raising the lower end of its full-year revenue guidance. They're now talking about a 5 to 7% kind of growth this year versus their earlier guidance of 4 to 7%. The reason is uncertainty surrounding the revenues that they get from the US government. The US government accounts for 8% of Accenture's revenue. Now, because of DOGE and the entire efficiency cuts, only mission-critical work will continue. The rest will be cancelled or scrapped. And therefore, there is still a lot of uncertainty. That's what the management said in the conference call yesterday, and that spooked investors. But that said, Indian IT companies' exposure is fairly limited to the US government. Let's now get to what brokerages have said. Now, Ambit says the commentary has turned incrementally cautious. 3 reasons. One, the company is talking about elevated uncertainty generally, given the geopolitical, the geopolitical environment, etc. Secondly, the management also spoke. The Accenture management said that discretionary spending is still, restrained at the lower end for smaller deals. At the larger end, there is no pickup, so it's status quo. But at the lower end, discretionary spending is more constrained compared to before. And third, the reason, as I said, heightened scrutiny around US government contract. For Indian IT, Ambit says that they're expecting below COVID growth, margins and cash generation, but valuations are at a premium to the COVID levels. So that's the view from Ambit. Jefferies too says that Accenture's Q2 performance was healthy. We've seen strong growth in North America, BFSI, but deal bookings were weak and there is increasing pressure on discretionary spend. They also say that Accenture's guidance implies a soft second half of the year, 2 to 4% kind of growth, and there is risk to Indian IT companies' growth estimates for the coming year. Infy and TCS are their top bets, and Coforge in the mid-cap pack. Nomura, on the other hand, has a slightly more bullish call. Their view is that in FY25, growth has bottomed out for the Indian IT companies. The recovery will take some time, but it's unlikely to deteriorate further from here on. They prefer Infy and Cognizant in the large cap space and Coforge in the mid cap space. Back to you.
Indeed, Reema, thanks a lot for that. Infosys and